Welcome to this video on use of money management in trading. After completing this video, you will be able to explain how money management enhances your trading strategy. Before we delve into money management, there is a need to establish what money management can and cannot achieve. Successful money management can significantly improve trading strategy. But it is not a magical pill. We need to have a trading strategy that is, on average, successful. Money management can't turn an unprofitable trading strategy into a profitable one. But it can help to multiply funds faster and avoid overbetting. Overbetting is simply having too risky trading positions, based on the past results of the selected trading strategy. Even a profitable strategy can lead to losses, if it's applied and traded too aggressively, and with high leverage. Let's play a coin toss game. We have to bet $1, and if we win, we keep the bet and get additional $2. If we lose the $1. The odds are in our favor, the expected value for our profit is positive. The game cannot be labeled as a fair game. An example of a fair game is a classic coin toss, where you either win or lose $1. Nobody has the edge. Still, could something go wrong even when we have the edge? Let's examine two bet sizes. The first bet is all in. Therefore, we bet $5. The second bet is cautious because we acknowledge that there is a risk, and we bet only $1. Going all in one turn, we either have $15 or empty pockets. Therefore, the all-in strategy is very risky. Going all in, even in a seemingly profitable game, is improper money management. In the case of the second bet, we either have $7 or $4. This strategy seems sustainable, but there is still a risk. For example, we can lose in the first 5 games, and be left with empty pockets. Therefore, the key takeaway is that correct money management is crucial.